as they come along. So yeah, we can take it from there. So again, welcome to everybody. The session's not going to be a very long one. We're looking at management accounts, what they are, why we use them, and then obviously taxation in terms of how do we not get into trouble with the tax man, and what are the things we need to do just to ensure that our tax affairs are actually in order. Okay, cool. So let me share the first one. Are everyone able to see that? Okay, fabulous. You know who I am. I think we've been down this road. I've actually started the wrong one. Apologies. Okay, fabulous. Okay, finance and accounting. Management accounts, I'm sure you guys are going to come across this often, and management accounts are really something that a lot of people will ask you for. It'll be your bankers if you're going for a loan, it'll be any sort of funder, or if you're looking for credit anywhere with a business partner or something like that, they're going to want to look at your management accounts. And what they're really trying to check is the health of the company. Is the business in a good standing? Is it able to undertake the repayments on the credit, or if I'm going to invest, is it a healthy business? So that's why it's quite important to understand what the document is, and it's made up generally of two pieces of accounting information. One is obviously your income statement, and the income statement generally will do as it says. It covers your income. So the actual revenue you earn less the expenses that you incur, giving you the profits obviously at the end, or the losses. So a lot of people tend to be concerned about the fact that they got losses. Often this is not really a big issue, because some funders look for cash flows more than anything, that you have the ability to pay your debt. So it comes out of your cash flow from that, if you're cash generative. And obviously then on your balance sheet is what sort of assets do you have? That's what they're really after to see. They use a term called NAV, net asset value. And what they want to do with that is ensure that your assets obviously exceed your liabilities. And your assets will be things like we have touched on in the business 101. Your assets will be your debtors who owe you money. It'll be like some smaller things that people often and forget. If you've paid a deposit on an office rental or something like that, that's an asset because it's owed back to you. Your equity, past profits count towards your equity in your business, and then obviously offset these against what you owe, maybe on motor vehicles or creditors you haven't had a chance to pay yet, and things like that. So that's what they're looking in terms of that. Is your balance sheet strong enough to support them having to claim back an unpaid portion of a loan, or if the investor to see what the value of your business is, because the balance sheet is strong, your net asset value will show them that there's a value inside the company. So those two elements work hand in hand to form your management accounts. And obviously the management accounts are very, very useful for a number of factors. So I'm just going to go through, before I go through that. Income statement looks like as sales, less your cost of sales. And that'll sort of give you, are you budgeting the right way in terms of your margin? Have you got a high enough margin? Because with the budgeted margin, you need to pay your overheads, and those are normally salaries, internet, telephone, things like that. And that'll either then leave you with a net profit or net loss. So it's definitely a very valuable tool to see if you actually have got your pricing right, or if you're overpaying in terms of your operating expenses, helping you to trim your operating expenses. Okay, the purpose of your management accounts. Yes, sir.
Tabella's got a hand up.
Sorry, I've got a full screen here, so I missed that. Thanks for pointing that out. That's Tabella, fire away. Sorry, Abella, do you want to unmute yourself and ask the question?
Yeah, I'm saying on the income statement that you showed that has income less cost of sales. I'm aware of another one that shows income opening stock and purchases less closing stock. When do you use that one? I don't know whether you're familiar with that.
So what ends up happening there is that when you are carrying stock, then you'd obviously have the information available. So generally the accountant will keep track of your opening stock. I haven't done it again. So yeah, it'll vary. So the more detailed your accounts are, the more detailed information you want to be showing. To find the right one, sorry. I clearly should not be driving both these elements at the same time. So just opening stock and closing stock. So generally what happens is the guys they'll utilize it in terms of if you want to keep track of your stock, especially if you're a person with stock. No, that's not the one. Sorry, this is now proving to be a pain in the neck because I'm trying to show you something else. Okay, there we go. No, it's not. Yeah, so sorry. The opening stock would generally, when you want to see your movement of your stock, a lot of guys don't utilize it in that sense. They tend to rather just have it as their income state. They just basically just have cost of sales. They're just showing the actual amount that they spent. So unless you've got inventory where you're keeping stock on a shelf or in a warehouse and stuff like that, they'll track then what your movement of your stock has been during the course of the year. But for most companies' purposes, they tend to then just track the actual cost of sale, the actual rand value that they spent on stock, essentially their cost of sale, because it might not be physical stock for some people, so they then just show it forward from there. I don't know if that helps. Cool. Okay. So let me just. I'll go back one so we can. So yeah, so the cost to sell here. I mean, this is just a basic outline, but they would then say add stock purchase, less stock on hand, and things like that. So, but for what it comes down to is really whatever sold, how much is it cost me to actually generate that sale. That'll give me my essential gross profit or your budgeted amount to spend. From there, you'll pay your overheads, rent, water, lights, telephone, staff, wages, and that'll leave you with a net profit on that. And these things will vary. They can be very simple, or they can actually be very detailed, which we'll see a little bit later. So the purpose of having management accounts, the big thing is you as a business owner, is helping you guide what sort of decisions you're making. And it's quite crucial because people often don't they don't look at the business as a whole. They look at each of the separate pieces on their own, and that generally it can work in isolation, but it generally doesn't work if you're looking at your entire business. So if you look at the second point, where it's looking at your sales streams or sales cycles, often we might know if we're in retail, December might be a busy time for us, and things like that. Or maybe middle of the year, June is very quiet. So what are we going to do with that? And that allows you to start thinking about your business in terms of, if I had enough cash, it'll make sense for me to buy all my items that I need for my year-end sales in the quietest time of the year, because generally all the other people are not buying. So you're likely to get a cheaper product. So you get your product at a cheaper price. Or if you buy early enough, you get lead time discounts and stuff like that. Especially if you think something as simple as an airline ticket. If you book your airline ticket about 6 months in advance, you're likely to pay about half price. So if you look at that in terms of your business and think about where I want to travel to go see my customers or grow a new market, you can start to book your airline tickets months in advance, getting a heck of a cheaper price. And then again, the same thing with either Airbnb or a hotel or stuff like that. And that then allows you to have more funds available later on. So your management accounts must be viewed in that type of thing. Other things like terms of sales cycles and streams, you can start looking at in your quieter time. So I think we did touch on it the last time. If I'm a PC or in computer, like IT shop, and I'm doing networking and things like that, or support, I might decide to add sales of screens, printers, mice, those type of things to my business, because then while I'm not servicing the client's network, they can potentially buy toners, cartridges, screens, and stuff like that. So that gives you a very good idea as the owner of your company to see where you're going in terms of your company. Other important thing is if you split your revenue streams. So again, using the computer IT company, if I split my revenue streams, I could say consulting, where I go out and just consult people on their network. I can have a consulting line item. I can have a actual physical installing networks or installing routers as a line item, and then obviously product, selling a screen or toner or something like that for them. And then in your cost of sales, you'd match the expense for that. So obviously in your time, if I'm just consulting, there generally isn't a physical product you buy in relation to that. But in terms of your printers or your network cables, there's a physical cost that you expend on offering that service. And that'll let you track if your margins are high enough. Are you making profits on those elements? Which will then obviously guide you into either increasing your price, or it'll assist you in terms of getting out of low cost or low margin industries, because you're finding that maybe there's a bigger player like an Incredible Connection who you can never beat on price. So rather move out of that and into something else. And most important of all with management accounts, about cash flow planning, because we all know cash in the bank is the answer. That's king with your management accounts. But often overlooked, that we've seen over the years, is that you got a company, it's growing, and a lot of our clients would say to us, "Yeah, but I'm showing a profit on my books, but I've got no money in the bank." How is that possible? Because how am I making a profit if there's no money in the bank? So there's two elements in that. First of all, if you're growing, what you're finding is that your cash in the bank has been used to either acquire more stock. So it might be stock sitting on the shelf, or it might be product you've sold onto your clients already and you're waiting for payment to come through. So you've got that time lag between when you purchase the product and when you get paid. And if you keep on accelerating that growth, more and more of your free cash gets tied up into this cycle of buying stock and having to wait on your clients to pay you. And if you carry on that accelerated growth, you're going to always find you're not going to have physical cash in the bank. But if you plateau, so if you're growing from 1 million to 10 million turnover, for example, you're going to be generally cash strapped in terms of your growth, because that free cash that would be sitting in your bank is getting pushed up into buying more product and you're waiting for your clients to pay and so. But if you now plateau out at the 10 million, you're going to suddenly start seeing that cash freeing up now because you're not accelerating any further. Now the money will be sitting more in your bank account, and then you'll start seeing it. It'll tie up a lot more. It'll make more sense. But another thing that people miss is that when you employ staff, so even though you're growing and you need your funds to buy stock and things like that, when you hire staff, it generally costs a lot more than just their salary. And a lot of people miss this. So if you're employing a staff member, they're coming on board for 10,000, let's just use a simple example. The cost of that person is not 10,000 Rand a month. Because invariably you've got to buy a desk for them. They might need a computer. There might be additional phone calls to be made. You might have to buy another printer possibly. So there's a physical outlay of cash before this person starts earning money, and the cycle is generally about 3 months. So you're in for 30,000 Rand plus the setup of maybe another 20, 30,000 with desks and computers and things like that. And this is before you have even made 1 cent from the staff member. So you always got to bear that in mind. What is the true cost of hiring your staff? And that causes a lot of cash flow issues amongst clients. So that's why management accounts are crucial. And it'll help you plan for that, because you can start working it out. So if you get 3 months, 30,000 Rand, double that cost again for the hardware side of the staff member. How long can I afford 60,000? And that'll be quite key. So very, very important to understand the value of your management accounts. Okay, we've been through some of these. So on some of the expenses and income that people often miss, your business will earn interest income, or you receive discounts from your suppliers, and that normally helps improve your cash flow, because you're not obviously paying out the money, but you got to record the discount in your income statement. Your expenses, we find a lot. The member or shareholder of the business often don't record their expenses that they pay on behalf of the business, and it's very important to do that to make sure that those expenses are sort of tracked in the books right from the first day. A personal thing, I was at a client yesterday and we were having this exact same conversation, and they had brought in a whole lot of assets that they had at home, and they brought it into the business, and they're like, no, it's okay, I had them lying around in the garage, I brought them into the business. It was nearly 500,000 Rands worth of assets. What that does is you can claim the deemed VAT on those assets, because as an individual, you bought them at a store, you paid VAT on them. So you might have bought them, I think these assets were originally worth about 3 million, and now they were a bit older, but they were now valued at about 500,000. There's 15% of that 500,000 you can claim the VAT on. And that does an amazing thing for a company's cash flow. So just be aware to bring things in. Even if you haven't paid an invoice, you got a supplier invoice, someone's invoiced you, and you haven't paid it, you can still claim the VAT on it. It's very crucial to understand this. So you don't have to physically pay the invoice before you can claim the VAT. Again, it helps with your cash flow. So years ago, with a client of ours who used to export, they manufactured locally in South Africa, sold locally, but about 20 or 30% of their sales were into the rest of Africa, where there's zero VAT. but because they hadn't paid their supplier, they weren't claiming the VAT on those invoices. And when we showed them how by claiming that, they're going to get a massive VAT refund because a large portion of their sale was a zero VATable sale. Suddenly it changed the cash flow enormously. They can employ more staff, and it helped a lot in terms of that. So other expenses like fines, penalties, home office expense, crucial now. We're all working at home, but for a lot of entrepreneurs, they work from home anyway. And they very, very often do not claim home office expenses. So just make sure those go in there. While they might not be VATable expenses, it's definitely going to affect your income tax because you'll have a higher rate of expense. So you'll have a smaller profit, and that means you pay a lot less tax. Okay. So in terms of these items, your management accounts, they can be very simple or they can be very complex. So just look at what suits your company. There's no right answer. What we generally find is people start out simple, and as they get comfortable, as they very comfortable, start getting understanding of their business, where it all fits in, so the management accounts get more and more complex because they're looking for a lot more detail. And then you just slowly evolve into it. There's no right or wrong answer. If you're very nuanced in your business, you can have a very simple set of management accounts, but because of your background knowledge of your industry, it's already telling you enough in order to make all the right actual choices. And then again, if you're new to an industry, you might want a way more complex set of management accounts because you need a lot more information around your industry and your sector. So just see what works for you. Your management accounts should do this for you. And a lot of people, don't get to look at it properly because your accountant gives you this and you think to yourself, what am I going to do with these bloody numbers? What do they mean? And we're thinking about accounting now instead of what are the management accounts for? The management accounts should do this. You want to know what your profit margin is, your net profit margin. Because obviously the higher this number, the healthier your business, the more profits you got. Same with the gross profit margin. So these are the things you want to see from your management accounts. This is the stuff that helps you make the right call. If these numbers are tracking down every month, so gross profit keeps getting smaller and smaller, generally, either your suppliers are increasing their prices, but the market's too tight, so you can't increase your selling price, and that then results in your gross profit margin shrinking. It also happens if staff are stealing your stock or customers are coming in and stealing your stock off the shelf. Your gross profit margin gets smaller and smaller. So these give you quick indicators to see what's happening inside your company. A return on your assets. I've invested money into my business and this is the return I'm getting on it. Obviously, the higher, the better. And funders look at these elements. So like, for example, something nice and easy is accounts payable days. So many of us entrepreneurs go around going, we don't want debt. So as soon as you get an invoice, you pay it. So as soon as you get an invoice, you go and you pay it. And therefore, you generally don't have cash in the bank because your customers are only paying you in 25 days' time, and you've gone and paid your suppliers in like half a day from the date of invoice. So it gives you a very quick understanding of where your company's going. Generally, these items, you want your accounts payable to be sort of 30 to 40 days, how long it takes you to pay your suppliers, and you want your customers to pay you cash upfront. And that way the money sits in your bank for a lot longer and you earn interest and you generally don't have a cash flow problem. And that's what these things will do. So you want to be able to track your cash flow. What is it doing? Your sales cycle. This is what you want to be seeing. These are my quiet months. How do I grow my turnover here that it looks good at the end here? And if you can visualize this, if your accountant can give you this information, you're going to make way better choices in your company by seeing this. You don't have to know accounting, debits, credits, because too many accountants get stuck on that stuff. But you need the information to do this, and you're going to make better choices on your business. Okay, cool. So I'm going to jump out of that slide deck. Let's pop into, no, it's not that one. So let's see where it is. So I'm used to running on two screens, and today I don't have both my screens with me. While we're switching over, do you guys have any questions regarding what we've just gone through? Don't be shy. There's no such thing as a wrong question.
I just wanted to ask, on the previous screen of the graph, you get those graphs on zero, or is it a different system altogether?
So this screen you see here is we got a product called SME Snapshot.
You get it on zero.
Yeah, zero's got one or two of them, but it's not that good. Yeah, so Dumasani and Ken would have signed you up to Snapshot. So just check with them. I'll check with them as well after this for your login details. Because what this, where this information comes from, Snapshot sits on top of zero. So as we're doing your accounting and processing your books, this information automatically gets pulled out of zero, and you can view it. You can log in and view it and see. And you can open each of these little tabs. You click on them and it shows you a history like this. So we'll just chat with Duhamasani afterwards, and he'll send you through your login details, and then you'll be able to see it. Okay.
All right.
Cool.
Okay.
Perfect. Anyone else? Questions at the moment?
Thanks. It was clear. Thanks.
Pardon?
It was clear. The presentation was good. Thanks.
Okay, cool. Let me now open the other one. Now we're going to look at the tax side. So Benjamin Franklin nailed this way back in 1789. There's only two certainties in life, death and taxes. And unfortunately, the only thing you can avoid is taxes, not death, because they're still going to tax you after you die. But how do we optimize? How do we work within the existing system? Because too many people are quite easy to say, you just don't register, or you put the money under your mattress and things like that. That's not certainty. Back a few years ago, 30, 40 years ago, before everyone worked on PCs and there was no internet and stuff like that, it was easy enough to hide away from the authorities. Nowadays, it's physically impossible. You'll post a picture on your Facebook page of your new car, and SARS comes and knocks on your door and goes, you haven't done a tax and return in 5 years. How do you afford a Range Rover? And that is starting to happen more and more. So it makes more sense for us to find ways to work within the system to minimize our taxes. So the key element is avoidance. If you evade tax, you then go to jail. If you avoid tax, that's legal. So what people often think is like, avoidance doesn't mean you don't pay tax. Avoidance is that you effectively kick the tax problem further down the road to a point where your business or your circumstances helps you minimize the actual tax. So I'll give you a nice example of tax avoidance. Your business is doing quite well and you're growing nicely, and we use the cash flow example from earlier. So you're growing from 1 million to 10 million over a period of time, and each year as the company is growing, you're starting to show that there's taxes. You're making a profit, and on that profit there needs to be taxes paid. But because you're growing, you're busy paying expenses on a business. You're busy prepaying expenses. So you're already covering purchases for next year, but it's not being recorded. So what you do is you then go and you make a provision in your current year to actually then reduce your taxes right now, because you don't have the cash because you bought stock with it, and that then drops your tax rate. But the problem is the new year now, you're growing still, and that then leaves you this situation now that you got a higher tax bill next year because you got a higher profit now next year, but now you're still growing. So you actually then provide for the next year's expenses into the current year's book. But as you're growing now, you're busy, tax on 1 million rand profit is a heck of a lot smaller than tax on 10 million rand profit. But you might be in a better position when you've made 10 million to pay the 2.8 million rand income tax. So that's what you do, is you actually just end up kicking the tax can down the road. Another simple one, a lot of us in the retail, small, medium enterprises, you might be a small business corporation. We did cover that in Business 101, small business corporation tax. But one of the nice tax avoidance structures is that normally if you make a profit, you'll pay 28% income tax. And then if you're to declare a dividend to get that money out, you've got to pay another 15% dividends tax. So what it works out, it's cheaper to just pay yourself all your profits as a salary, because that's only going to be 45% instead of 48%. So that's one way of doing it. If you're a small business corporation, you've got that sliding scale where effectively you go from no tax to 10% income tax up to 550,000 rand profit. So what you could do there, you don't pay yourself a salary at all, and you take the dividends tax, because 10% tax plus the 15% dividend is only 25%, instead of paying maybe 40 or 35 or something like that. So these are effective avoidance measures. So just be, there's a lot of legal ways of doing this. It's not just a case of, I'm not going to declare the tax. I'm not going to declare the cash. I'm going to put the cash one side and SARS will never know. Trust me, they find out. So there are a lot of ways of staying ahead of the tax man. Most importantly is make sure you are registered for all the right stuff and you submit the forms. Don't make the mistake of registering and not submitting the forms. It's you're just asking for trouble. So what they did about 2 years ago in the Tax Administration Act, not submitting the forms is a criminal offense. They can come and arrest you. And they can then take you to a room and essentially make you complete. That's what the arresting is for, to force you to complete the forms. Because if you haven't submitted the forms, they don't know how much you owe. So you owe nothing because you haven't made any profit, so there's no income tax. But SARS doesn't know that. So how do they force you to put the forms in? Put handcuffs on you and take you to a room and you submit the forms. It comes out that you owe no tax, off you go. They will still fine you, I promise you. So don't just leave it. If you've registered for something, fill in the forms, even if it's nil. If you owe them money, fill in the forms with the right amounts, and like any other creditor, you can make a payment arrangement to pay down the debt. Just don't leave it, because then they'll flag you. They flag you on the system, and then they'll continuously want to audit you or, dig into your affairs and stuff like that. They're going to want to know what car you drive, what suburb you live in, effectively lifestyle audit you. So the easiest way is, if you need to be registered for something, register. Complete the forms on time, and if you can't afford, make payment arrangements. You'd have an up-to-date accounting system. The reason for that is twofold. A, you understand your business, you understand what you owe, because it'll calculate it for you. And then if SARS ever audits you and says, no, we believe you should owe more, you can prove to them that they're wrong. Because it does happen. SARS does get it wrong, trust me. There was a very famous case in South Africa. I'm just trying to think what the man's name is now. So there was this guy, I can't think of his name, it'll probably come to me now as I'm telling you the story. He owned a very large company, well, not him, I've just made the same mistake that SARS made. He was a beneficiary of a trust that owned a large company listed on the JSE in SA. And one of the Sunday paper, the SARS official was reading, and the owner of this company, this guy, was pictured in the Sunday paper with a very expensive painting that his trust had just bought. But the reporter had said that he had just bought this actual painting. And just by coincidence, the SARS official reading the Sunday paper had just done a tax return assessment for a guy with the same name. And he thought, this is so random. What's the chances of me doing an assessment for a guy with this name and I'm reading about a similar guy in the newspaper? What's the odds? And he went back and checked up on it. This led to a 10-year court battle between this individual and SARS. And when he proved to SARS, he proved that he first made them an offer. He said, guys, yeah, there were some things that were off. He has an offer to settle. SARS didn't want to settle. They wanted to go after a much bigger payday, expecting 2-3 billion rand in unpaid taxes. What happened then is they went through this stuff, and it turned out that they should have just taken the offer originally, because the 200 million or something he offered to pay them in settlement for the under and declaring ended up costing SARS nearly 1.5 billion rand in court fees, because they attached his private jet. They attached, I think he owned Chelsea, a Scottish soccer team. They attached all these assets, and they had to pay for the upkeep and maintenance of them and stuff like that. And invariably, when it all unraveled, SARS was wrong, and it cost us, the taxpayer, a lot of money. So that's why it's important to keep accurate records so you can show what's going on. Payroll as well. Biggest headache for anyone is pay as you earn. Payroll taxes. Small things like driving the car the company owns. People don't declare the benefit. SARS comes and does an audit, and you pay 2% of the value of the car, plus a 200% penalty, plus potential other fines. So it gets very, very expensive, very, very fast. So a 100,000 rand tax bill, the actual physical amount owing, can suddenly become 500,000 rand with penalties and additional charges by SARS. So just keep all your stuff in order. I'm not telling you this to scare you about SARS, but if you got your stuff in order, you'll be able to fight any issue of theirs. Have all your registration going through that, because if your books are accurate, you'll have all these numbers done. You'll be able to conclusively submit the returns on time and go forward from there. Yeah. So while these things are pain in the backside, because we all know it takes a lot of admin. They've worked it out. If you're a small business owner and you are doing your own stuff, you're doing your own submissions, and you're doing your own return. So any of these items, if you're submitting all these items yourself, the time it takes you to do that, it roughly works out to about 40 days in a 365-day cycle. That's the time that you end up working for SARS to submit your stuff. So this is why it's important to have a good accountant or have a good understanding of what needs to be done. And if you get it wrong, it's always going to cost you a lot more, not only in time, but also in money. But governments realize that they do need small business. I know a lot of them, especially in our country, you'd swear the government has no idea what small businesses do or why they need them. But generally around the world, governments understand the value in that of small businesses. So they do have a lot of incentives around that space. So always look out for them. And unfortunately, a lot of accountants don't have an understanding in small business tax. So just ensure whoever you're dealing with has an understanding around the small business taxes. So what governments tend to do is they'll reduce income tax. So like with a small business corporations tax, it's either 0 or up to 10% of taxes to a certain amount of profit. They'll accelerate your and depreciation, so you can write your assets off faster. So the faster you write your assets off, the less tax you pay. Compliance burdens. If you look at SIPC, in the past it was a bit harder to go register a company. If anyone's been on there recently, you'll see how easy it is now to register a company and get a bank account and register for workman's comp. Literally, you can do it in an hour, and you register all the right stuff, including a BE certificate and stuff like that. So compliance burdens are being and reduced to make it quicker and easier to register. You're not wasting your life standing in a queue somewhere, as it used to be. And then they often have these voluntary and disclosure programs where they write off taxes. So if SARS is unaware that you owe them money, you can get your books in order, apply under voluntary and disclosure program. So what it means is that you are voluntarily disclosing you owe them money, and then what they will do is there'll be no criminal prosecution, there'll be no penalties, there'll be no interest on the capital. At worst, you pay the full capital amount outstanding that you owe them. Over a period of time, you can do a payment arrangement. Or sometimes now, if the business is closed or things like that, subsequently, they'll reduce the debt and allow you to pay for smaller amounts or stuff like that. Just don't do nothing. Too many small business owners are totally unaware and they don't want to know anything, so they don't follow up, they don't ask their accountant, they don't talk to the people, and then suddenly what happens is you end up with this SARS knocking on your door, or they take a judgment against you and you go apply for a car, or you want to get a job interview because now you know you're tired of this entrepreneur life, and it shows up that you got a record for non-payment of tax, or you listed on the bureau for something. So just be aware of that. There's so many simple ways to keep yourself ahead of the tax man. You don't have to be, you don't have to have a whole big accounting tax arm behind you driving people. Just be aware of the actual basics and you should be able to sort it out. Cool. Guys, any questions around the tax element?
I have a question.
Hello? Go for it.
I just wanted to know on the small business tax,
Mm-hmm.
you write off in the first year 40%, or is it 40%? I'm not sure. I'm just wanting to clarify myself because I was doing it wrong.
Yeah, so what happens in the small business corporations thing, if the client qualifies as a small business corporation, your depreciation on manufacturing assets, the depreciation is 50% in the first year, 30% in the second year, 20% in the third year. Normally the write-off is over 5 years on average. So by accelerating it, you get to write off your assets in 3 years. But then also your laptops, electronic equipment, you can write that off immediately. The day you buy it, you can and depreciate it in the first year of purchase. So especially a lot of us who are working with laptops and computers and things like that, it helps a lot. I mean, we've got a client who does and design work. And those Apple machines that they work on are like 150,000 Rand. And she gets to write the thing off in the first year. So she pretty much buys herself a brand new machine every second year. So yeah, and it saving is more in the write-offs than it is in the tax saving, because the tax saving is 100,000, 96,000 Rand. The write-offs are much higher. I mean, if you think about, you start a carpentry business, you buy a lathe, you buy a planer, you could be in for 500,000, and in your first year you make maybe 300,000 Rand profit. 50% of that 500,000 is 250,000 Rand in depreciation. Your tax goes from 300,000 Rand, where you got to pay income tax on, down to 50,000. And then you're a small business, so in the first 75,000 you pay no tax. So effectively you just got it tax-free in your first year. So that's why it's crucial. The write-downs are the key thing here. You get a lot more savings than that. So I don't know if that helps you, Abella.
It helps me a lot, yes.
Perfect. Andile, you were going to ask me something.
Yes, thank you. So I recently went to SARS, and they said you only go there by appointment. So everything now needs to be done through e-filing. So my question is how that will have a detrimental effect on businesses, because now they have to do the e-filing. Do you think the people will still be interested in submitting their returns, or it will be one of those things where they will blame it to SARS?
Yeah, so what's happened with that is obviously SARS has been driving everyone to e-filing for some time now. And yet they couldn't force everyone to do e-filing because of the fact that there are a number of people who are not in computer literate. So effectively forcing them out of the tax net, which is not what they want to be doing. So what you're experiencing, what we've seen, we've also experiencing, is because of the COVID-19 lockdown. That's where SARS is trying to push everyone online now, including meetings. We're even having meetings with SARS online, like this, like a Teams meeting with them. So it might just be temporary now during lockdown, but they generally can't force everyone just to operate online, because there's just so many people out there that just don't have access to internet and stuff like that. So yeah, I wouldn't. You probably find it's just temporary at the moment. But if you want help, Masani and Ken can assist with anything what you're going into SARS for, and we can maybe help you there.
Thank you very much.
Okay.
Yeah, thank you.
Anyone else? Any other questions? Nick, you moving stuff across the border. You should have a lot of avenues for tax avoidance, which would be quite handy in terms of VAT claims and things like that. Have you found that you're having issues in that space, or getting refunds and being blocked?
What we have seen is that well, there are several ways to get refunds. So what we have seen over the years is that it's better to claim than not to charge VAT on export invoices, because getting the paperwork and getting all the required, the documentation to show proof of export can be tricky, because the moment that clients get their goods across, they don't care to give you the both sets of documents to show the proof of export. So basically, we have gone to that phase where we're saying export is basically client's responsibility. For us, we charge you the VAT, and you can claim the VAT on your own to the VAT refund company or whatever way that you do. That way, it has reduced our tax headaches, and because the moment that we did not put it and say this is zero rated on our VAT submissions. It created a whole lot of problems, and yeah, SARS is a very difficult. Sorry about that. SARS is a very, I mean, they've got so many items that, to be honest, are complicated in my world. But the one easy way to avoid tax is to, when you're exporting, is to zero rate. I mean, to say this is an export and you provide the proof of export. The second way that usually helps our clients is us being able to organize for them the SADC certificate of origins to show the items that are manufactured or what a percentage manufactured in South Africa. Then it means that the duties that they're going to pay is going to be less, and it also has helped us to get the pricing down. I mean, the landed cost down on several products. So I think export is much easier, but it's tedious. It has got a lot of documentation that you have to prove, and until we are in such a space where we have got our own team to do everything 100% on both sides of the borders, we have basically said we're better off charging VAT and all these taxes, and then we assist our clients to claim by, saying once you are ready with all the documentation, we'll assist you to file it with the VAT refund company, and it has made it easier for us.
No, I agree with you. I must actually check some notes of ours, because if your client is, even if your client is across the border, you can, and transport is their responsibility, you can sell it to them at zero rated, and then it's their responsibility to get the transport organized. And then they get all the documentation in order and stuff like that, and so they can prove that they've bought it and it's going for export, and that way you still get the VAT refund that you're not now, because you can now have a VAT refund going forward from them. I'll have a look. We had a client that was manufacturing heavy machinery for mines, and they were then exporting it to their clients throughout Africa, and we were getting about R500,000 a month back in VAT from SARS, and they'd managed to sort it out without too many headaches. I'll have a look. Maybe I can find the guys we're using and maybe introduce you, and then that could help with your process of getting it across the border. Cool. Any other?
That would be great. I think it really depends on who is doing the paperwork and who is doing all that, because previously we used to just say, because the client we have put in on the invoice there is the address that shows it's being exported and all that, then it was fine. But then the question now came to say, how is it? I mean, how can you prove that this is not a local client that you just created a funny address and put as an export? So
Exactly.
really had to, go back on that end, because the accountant had advised us that this is going to create problems, and you don't want to say you have not charged VAT, and then SARS comes and now charge you VAT on those invoices, wherever you did not collect that revenue. So
Yes.
we really had to change that and say, everyone, we just indicate everything is VAT included, and we include the VAT, so that we do not get to be found wanting.
Yeah, it sounds like the accountant was a bit lazy just to do a bit of research. Let me go look. I'll go look back on my notes, because obviously one of the benefits of exporting is that you get the VAT refund, which helps your cash flow. So definitely worthwhile, because obviously you're charging zero VAT on the outgoing sale, but then you're incurring VAT on the purchase. So you need to get that refund on that. So I'll go back and look on the notes the guys we were using and happily share that with you, because that's going to improve your cash flow a lot.
Thanks. It will be on the lookout for those notes. It would be great if we can get that clarified, and for us it makes a whole lot of difference.
Indeed. No, cool. Anyone else? Any other questions around sort of staying ahead of the tax man? Okay, awesome. Guys, if you think of something afterwards, don't be afraid to drop us a mail. Get them off to Duhamasani, a question you might have around tax, or how you can maybe potentially structure. I think Duhamasani, maybe after your exams, maybe end of the month, early next month, we just have a quick individual half-an-hour tax chat with each of the guys on the program. I can quickly look at their books and see what we can do in terms of maybe a tax saving structure for all the guys on the program. You can set that up maybe early next month.
Yeah, definitely, that will work.
Okay, fabulous. Guys, thanks a lot for taking part. Really appreciate that you guys are on the program. Yeah, it's awesome to be helping. Thanks a lot. Have a great day.
Thank you very much for the insightful presentation.
Thanks, man. Thanks, Andile. Okay, guys, enjoy your day. We'll chat again next week.